Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan live from Yahoo Finance's studios in London. It's Tuesday, 23rd September. Coming up on the show, stocks across the globe get an AI boost from Nvidia and OpenAI. Jerome Powell is due to speak later today, and Boeing takes centre stage in US-China trade negotiations. So grab your coffee and let's own the morning. Well, the first thing you need to know about is that the Fed Chair Jerome Powell will be speaking for the first time since interest rates were cut last week. Treasury yields slipped slightly in anticipation of his remarks. Investors will be looking for more clues about the Fed's interest rate path. On Monday, new Fed Governor Stephen Micron said steep rate cuts are needed, but St. Louis Fed President Alberto Mussolem signalled he would be cautious about supporting further easing. One of the key economic updates expected this week is the Personal Consumption Expenditures, or PCE index, the Federal Reserve's favoured inflation measure, which should give a glimpse of inflationary pressures and the state of the broader US economy. Now, the next thing you need to know about is that President Trump will be speaking at the UN General Assembly later today. His speech comes amid ongoing trade tensions and the fallout from his announcement of a $100,000 H-1B visa fee. Trade talks between the US with both India and China are still ongoing, the two countries most impacted by the new visa fee. And the last thing you need to know about is that global growth forecasts have been lifted by the OECD. It said the full brunt of the US import tariff shock is still to be felt, as AI investment props up US activity for now and fiscal support cushions China's slowdown. The OECD now expects global growth of 3.2% this year, compared to the 2.9% expansion it had forecast in June, with many economies appearing more resilient than expected so far this year. Growth expectations for the US were also lifted to 1.8% for 2025, compared to June's 1.6% estimate. This still marks a significant fall from 2024's 2.8% growth. Now, a commodity we've been talking a lot about in 2025 is gold. Well, it continues to surge. It hit another record high above $3,750 earlier today. In fact, over the last 12 months, that precious metal has gained over 40%. Well, our very own Ines Ferre explains what's behind the latest moves upward.
You are seeing record highs with gold seeing 5 straight weeks of gains. And you're seeing these record highs with gold at 40%. Look, gold right now is 40% up for year to date. That is on pace for its best year since 1979, when gold was up around 130%. This has been a monstrous year for gold. Remember that the last time that we saw multiple record highs was back in April. Then you had a consolidation period. Now it's breakout once again. A lower dollar, that's been contributing to gold's rise, the Fed easing, central banks buying more, and you still have Wall Street bullish on gold. You're still looking at calls of 4,000 by mid-2026, some with bullish calls up to 5,000 by the end of next year. Goldman Sachs, though, did say that beware of speculative plays. You could see some pullbacks on the way higher. Taking a look at digital gold, if you look at Bitcoin today is down more than 2%, trading around 112,000. You're seeing Ethereum, though, that's down about 7%. Solana also down, taking quite a bit leg lower. There's no clear catalyst for why we're seeing crypto prices under pressure today. Part of what's been talked about is the sheer number of crypto treasury companies that have come online that are basically copying Michael Saylor's strategy on adding crypto to their balance sheets. But look, September tends to be a volatile month for crypto. For Bitcoin, it tends to be a seasonally weak month. Bitcoin is typically better in October. You still have bullish calls when it comes to Bitcoin, and also ETH. You've still got some analysts that are calling for ETH to double by the end of the year.
Okay, for market movers, we're going to focus on AI. Now, stocks across the world, especially in some regions in Asia, got a boost from optimism around AI after Monday's announcement from Nvidia that it will invest up to $100 billion as part of a new partnership with OpenAI. Well, that sent Nvidia's shares up around 4% on Monday to close at a record high. NVIDIA said in its announcement that the partnership will allow OpenAI to deploy at least 10 gigawatts of compute capacity from the chipmaker's AI systems to train and run the ChatGPT maker's next generation of AI models. The OpenAI NVIDIA deal is an ambitious undertaking for the companies. For reference, Meta's mammoth 4 million square foot AI data center under construction in Louisiana is set to deliver about just 2 gigawatts of compute capacity. But on the flip side, Dutch chipmaker ASM International cut its revenue forecast target for the second half of 2025. It now expects demand for its most advanced machines to drop towards the end of the year. Intel is one of ASM's major customers and has adopted a more cautious spending policy. After the closing bell today, we'll also hear from US chipmaker Micron. The company will release its fourth quarter results after the closing bell. Analysts are expecting big things from this announcement, as they believe that there is high demand for Micron's most expensive memory chips that are used in AI data centers. My colleague Julie Hyman has broken down what Micron actually does.
Micron is set to report earnings in what marks the next test for artificial intelligence demand. But what exactly does Micron do? It's a memory chip maker, and it's one of the best performing chip stocks this year. Founded in 1978 and headquartered in Boise, Idaho, Micron has grown into a global leader in DRAM. The company's growth is being fueled by high bandwidth memory, also known as HBM. That consists of bundles of DRAM chips, which are closely connected to processors from NVIDIA and vital for AI computing. Now, what's DRAM? Well, that stands for Dynamic Random Access Memory. It's a specific type of RAM, or random access memory. All computers have RAM. DRAM is one kind that we see in modern desktops and laptops. Its main competitors in that DRAM segment, Samsung Electronics and SK Hynix, both of them are based in South Korea. Micron plans to expand in the U.S., announcing in June it will spend about $200 billion on U.S. manufacturing and research and development. The R&D spend, along with strategic partnerships, have positioned it as a key player in the semiconductor space.
Okay, we're heading for a short break now, but when we're back, we'll have more of the latest Stocks in Translation with Jared Blickery. He's going to delve deeper into corporate share buybacks. Welcome back. And if you've been following markets this year, you've heard about a slew of share buybacks by large companies, including Apple, JP Morgan, Chase, Chipotle, and many others. Our markets and data editor, Jared Blickery, explains everything you need to know about corporate share buybacks.
We've got the major indexes sitting near record highs, even the small cap Russell 2000. The S&P 500 alone has added $16 trillion in market cap since the April lows, and meanwhile, the Fed is cutting again. And earnings season is about to start. But one of the biggest supports for stocks is fading right now, the stock buyback bid. And that's what we're digging into on today's Stocks in Translation. First, a quick definition. A stock buyback or repurchase is when a company uses cash to buy its own shares in the open market. Fewer shares can lift earnings per share and also support the stock price. And it can also help offset any compensation paid to employees in stock. The buyback is a legal, common tool, but it does not guarantee gains. The first chart that we're going to look at, courtesy JP Morgan, shows how stock buyback announcements have been tracking this year in white versus the 3-year average in green. Notice how 2025 climbs faster and higher. It's only September and we're already closing in on $1 trillion, which happens to be the end of year average. Also important, these are only announcements, not actual buyback executions, which we're going to take a look at next. This next chart by UBS shows the rolling 5-day buyback executions for 2025 in billions of dollars. Notice the rhythm. There are 4 separate waves per year, which coincide with each of the 4 earnings seasons. We're going to get to exactly why this is in a minute. Meanwhile, the dotted line shows where we are right now, and just to the right of it is an estimate for the rest of the year. Then if you look just to the left of the dotted line, you're going to notice how buybacks have recently dropped off quite steeply. This is because we are now in the buyback blackout window. This is a quiet period before earnings season when many companies pause share buybacks. They do this to avoid trading while they hold earnings results that are not public just yet. Some companies keep a small autopilot running, which is perfectly legal, but overall buyback demand, it drops noticeably. In this next chart from Goldman Sachs, we're going to zoom in on the current blackout window, which tracks mid-August through mid-October. The vertical axis tracks how many companies in the S&P 500 are in the window right now. The higher the number, the fewer the buybacks. And you can tell from the dotted line showing where we are right now that we're getting close to the peak, which extends into mid-October. This means the so-called buyback bid is shrinking, but should start building again as earnings results hit the tape and companies exit the window. The timing matters because September is historically the weakest month of the year. This chart shows the median gain or loss for each month in the year in the S&P 500 going all the way back to 1990. You're going to notice that only September tends to be negative. And remember, that's right about when the blackout window widens, which is right now. And although October is a good month for stocks on average, it's a month when historically we've seen a lot of stock market crashes and when volatility tends to spike. So just to recap, we are at record highs right now, the Fed is easing, we've got earnings ahead, but the buyback safety net is partially pulled back until results start rolling in. It just means a bit less cushion and bigger day-to-day swings. Here's what to watch out for next. Remember that the buyback blackouts, they peak in mid-October, then they lift. Watch out for the buyback bid to return as earnings season shifts into high gear. Then, as results roll in, you got to pay attention to companies updating their share repurchase plans. And also watch out for spikes in the VIX volatility index, which tends to get bigger into September and October. A higher VIX usually means weakness in stocks. And also, you might keep an eye on long-term government rates. A big jump, they can take bites out of stocks and kind of hit them harder when buybacks are light. So the bottom line is, for the next few weeks, the market's biggest consistent buyer is mostly on the sidelines. So a little caution is warranted as we celebrate all these record highs. And tune in to the next Stocks in Translation, the podcast, for more deep dives into markets. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
Great insights there from Jared. We'll be back in just 2 minutes with trending stocks and some big news about Boeing. It's time now for today's trending tickers. Well, let's start with a big headline this morning. Boeing is getting a lift after taking center stage in US-China negotiations. Shares are up in pre-market now. Let's have a quick look at that chart. That's up over 2%. That's after the US ambassador to China, David Perdue, said that the two countries were in advanced negotiations for a, quote, huge deal to buy Boeing planes. Bloomberg has reported the order could involve up to 500 aircraft, which will be Boeing's first major Chinese sale since before the pandemic. The American plane maker has lost ground to its European rival Airbus in recent years. Next up, Ørsted is rallying after a federal judge lifted the Trump administration's ban on its massive wind project off Rhode Island. And the Danish wind company's shares listed in Copenhagen, which have been in free fall in recent weeks, shot up by more than 12% at one point and now standing at over 4% higher. The offshore wind farm is 80% complete, so this is a big relief for the investors worried about Ørsted losing several billions of dollars if the project was cancelled. Now, there's another renewable energy stock you need to watch today, Plug Power. Shares of the hydrogen cell fuel maker continue their remarkable run. After soaring 21.6% in regular trading, the stock is adding another large amount in pre-market. This has a lot to do with artificial intelligence. Investors are looking at potential of hydrogen storage in data centers, which will have sky-high energy needs. On to healthcare stocks now. And Tylenol maker Kenvue is bouncing back from a steep sell-off following President Trump's statement linking Tylenol to autism and ADHD. Kenvue's New York listed shares gained about 6% in after hours as many doctors rejected Trump's claim, and Kenvue reiterated there's no scientific evidence that Tylenol causes autism when taken by pregnant women. Finally, Alphabet is seeking to avoid the breakup of its ad tech business in a new antitrust trial that threatens to upend its business. Former FTC chairman William Kovacic talked with Yahoo Finance's Miles Udland about what's at stake.
This case focuses on ad tech, on its advertising services, the ad exchange, and the operation of the ad exchange. So this case seeks, in the Justice Department's view, to loosen Google's control over this critical element of the advertising stack and to give publishers and advertisers more freedom to choose alternative strategies for dealing with each other.
Now, I'm curious, in your view, based on the ruling that we got last month, how this maybe impacts the government's case going in, the government's thought around the case, Google's case going in. Like, is there a relationship here, in your view, of how the company and the government may approach these proceedings, given what we saw handed down in late August?
We can be sure that the judge in the ad tech case has studied that earlier decision very carefully, both to look at the framework that Judge Mehta used in the search case and to assess how it might be applied in her own circumstances. So that's going to be a very informative framework. The key difference is that Judge Brinkema's case involving ad tech involved different facts, somewhat different arguments, and she has considerable discretion to decide how she will apply that legal framework. So the lighter touch treatment that Google received in the search case does not necessarily predetermine a similar outcome in the remedies case in ad tech.
Now, I'm curious, though, we've seen kind of the environment towards antitrust, the enthusiasm that some corners of government have around enforcing certain statutes or, interpreting them certain ways has changed in the time since this case was first brought and then we actually go to trial. How does either side think about that in the run-up to a proceeding that is, this kind of high profile, especially around a company like this, with the potential, remedies that I think some thought could be handed down depending on which way the judge breaks?
One area of continuity that we've seen across the Biden and Trump administrations is a commitment to pursue these big tech cases. The leadership of the Department of Justice has been emphatic in saying that their approach is full speed ahead, that the broader aim of structural relief, which would involve some element of a divestiture, is still front and center in their remedial aims, so that the Trump administration and Biden administration, although they're not fond of saying they have much in common, seem to have common cause on this case.
Okay, time to look at some charts now. Now, since Trump announced a $100,000 fee on the H-1B visas, the H-1B program has been in the spotlight. But what does this change mean for your stock portfolio? Well, if you look at the companies that have gotten H-1B visas approved in 2025, you'll see that 5 of the top 6 are all Mag 7 companies. Amazon got nearly 15,000 H-1B beneficiaries approved this year, followed by Microsoft, Meta, Apple and Google. It will be interesting to see how these numbers change next year if the fee really shoots up to $100,000, up from just a few thousand today. So, if you can clearly see from these numbers, we are talking about a tiny portion of the US workforce, but a really important one from the economy. Look at how these Mag 7 stocks have performed, creating trillions of dollars in value for the US economy. And it will be interesting to see how this affects global trade relationships, as the vast majority of these visas goes to beneficiaries born in India, followed by China, which is quite far behind actually.
H-1B visas are designed for what are designated as highly skilled workers from outside of the U.S. to come in and work in the U.S. They're heavily used by the tech industry. Joining me now to talk more about the effect of all this, Henrietta Trace, Beta Partners Managing Partner and Director of Economic Policy. So Henrietta, it seemed as though there was initially a lot of confusion when this was announced. Now there's a little bit more clarity. It's a one-time fee, for example, not an annual fee. But we've seen more of an effect stock-wise on Indian companies than on U.S. tech giants. What are you hearing about how this is being digested?
Yeah, there's a lot of moving parts here. As you suggested, there was a lot of confusion as Secretary Lutnick came out and said that this was going to be an annual fee collected over 6 years, which would have been a material ongoing sort of persistent negative for what I think it's 71% of H-1B users that come from India. The bulk of the remainder come from China. But the negative hit of 6 consecutive years of $100,000 a pop would have been materially detrimental to India and migration over here. I think it's something like 86,000 workers per year that receive this H-1B visa. So it is a material negative for India. And what the administration has made clear, which is why some of the tech companies are being a little bit protected today and not responding in the same way, is that there were going to be licenses and exclusions and off-ramps for what you might assume would be the tech sectors that are closest to the administration and the CEOs there that are closest to the White House.
And Henrietta, as you mentioned, this also has implications for U.S. relations with India. This ahead of UN Week here in New York, where global leaders gather. President Trump scheduled to speak tomorrow. Presumably, we'll see some maybe handshakes between Trump and Modi. Who knows? But what are you sort of looking for and zeroing in on there?
Yeah, the U.S.-India trade situation is not good. Not only do we not have a deal with India, but the tariffs keep ratcheting up. Latest is obviously this H-1B visa situation. But prior to that, we'd had the Russia secondary tariffs imposed by President Trump at unilateral authority through the International Economic Powers Act, and basically saying, you guys are not negotiating with the United States the way that we want. We know that Ambassador Greer, the current USTR, has been very focused on India, not just in the second Trump administration, but also in the first, originally stripping them of their GSP status. And they have a lot of issues to work through. There are at least 3 phases of trade negotiations that they anticipated working on with India. And we're not even done with the first one yet. And it's October, or almost October. So there's a long way to go.
That was Julie Hyman talking to Henrietta Trays from Veda Partners about the H-1B visa. Okay, some breaking news very quickly. AutoZone have just released their results. Sales actually beat estimates, but shares are down in the pre-market. We'll have more on Yahoo Finance throughout the day. Okay, before we go, let's check in on the markets and where they stand. Let's start in Asia. Now, for the eagle-eyed amongst you, you might notice that there's no Nikkei there because Japan is on holiday. But stocks in the region really did get a boost from that chip optimism that we spoke about earlier. South Korean and Taiwan shares in particular performing pretty well there, as you can see. Let's turn it over to Europe now, and they got an AI boost as well. But also there was another plus out there. There's the data out earlier that showed that the euro area's private sector expanding at the fastest pace in 16 months. Okay, and let's take a quick look at US futures right now. And it's fair to say they've traded a little indecisively earlier on, kind of echoing the pattern of the last couple of trading sessions. Remember, those did actually eventually give way to extended rallies. We'll have to wait to see if the same happens again today. Okay, and that is all we have time for on Market Sunrise. You've been watching Morning Brief Market Sunrise. I'm Ramzan Karamali. Go own the morning.